for our weekly Protect Your Wealth segment, and here is something for all of you gold bugs out there. A hotel in Abu Dhabi has unveiled a new ATM-style machine that dispenses gold bars or coins in exchange for cash. Demand for gold has been skyrocketing, as we all know, as concerns about a Eurozone sovereign debt crisis continue to linger, pushing gold prices to record highs. Well, I'm sure Prue Saxena has a thing or two to say. He's, of course, the money manager and CEO of Prue Saxena Wealth Management, joining us for a Hong Kong studio. So, Prue, you've been talking about how gold could certainly get more traction as inflation picks up down the road, and, of course, oil prices could hit lofty new highs. Would you line up at the gold bar, gold coin ATM machine? Is that something that you would get into, or would you go into the miners, the ETFs, and et cetera, other ways to get into gold?
We invested in gold when it was around $300 an ounce. Back then, when we started buying gold, people thought we had completely lost the plot, Chloe. Now gold has become mainstream. The price is at a record high in nominal terms. We are now entering the seasonal correction period during the summer months when gold has shown a tendency to pull back somewhat. So I would not rush now to the ATM, as you say, and buy gold and silver bars and coins. I think investors are likely to get a better buying opportunity in perhaps a few weeks' time in June and July, which is when these precious metals make an important low. Having said that, we are of the view that gold and silver and precious metals in general are in a secular uptrend against paper money because governments all over the world are committed to destroying the value of their currencies, and these bailouts are just going to compound the problems, and the end result would be a total lack of faith in paper money and the fiat money system, and that's why we think gold and silver ought to be part of everyone's portfolio as a hedge or an insurance policy.
Right. I guess that this means that for investors waiting to buy on dips, it could mean that maybe if the IMF starts unloading some of their gold, because after all, they do have to take part in that massive bailout package in Europe, that could be a good opportunity for if the Chinese start unloading some of their gold as well.
The IMF has been selling gold for a long time, Chloe, but the important distinction now is that the public sector has now become a net buyer of gold after being a net seller for many, many years. And if the IMF does come out and threaten to sell some gold, or if it does indeed sell some gold, I'm convinced that one or two Asian central banks are going to be very happy to take that gold stash away from the IMF and onto their own coffers. We are of the view that as long as the monetary inflation and debasement continues all over the world, and as fiat money, more and more currencies become suspect, gold and silver are likely to do well, and the miners which produce the metals, which are extremely highly leveraged to the price of gold, the unhedged miners especially, are likely to have a very good future over the next 3 or 4 years.
Peru, it's Anna in London. Good to see you. I hear what you're saying, but some investors might take an entirely opposite view to yours. They might be suggesting that, well, okay, so we have seen stresses in the global economy over recent years, but we've seen stresses before and we've come through them. It hasn't led to a breakdown in confidence in the paper money system, as you suggest, could be about to happen. And they might look at the gold price, see how far it's risen, see how much ETF interest there is in gold, and how volatile and possibly how dangerous that could be, and say, well, I don't want to get anywhere near that gold price.
Well, someone's buying, Anna, because the price is at a record high. The price of gold is at a record high, not only in US dollar terms, but when measured in various currencies. So it is clear that investors are seeking refuge in gold as a safe haven. The point is that these politicians have made this problem a lot worse. Although they've applied a short-term band-aid, Anna, you don't solve a debt crisis by printing more money and taking on more and more debt. All that has happened so far is that the liabilities have been transferred from the banks and the shoddy financial institutions and onto the public sector. These liabilities and these losses are very real, and by nationalizing them amongst the public and by increasing your debt level by a few more $1 trillion, this is not a sound solution to the problem. This is just going to make problems worse. And as I said, throughout history, whenever governments have printed money and gone down this route, money has always ended up being debased, and we have had sky-high inflation down the road. And we suspect that we are going to see something similar in the next 3 or 4 years.
Peru, but do you not worry about the price of gold in relation to all of these ETFs that have been set up to track it? I mean, some of them don't own the underlying product here, and while that might not be an issue, we have seen in the past times where we end up with a derivative product that is so large in relation to the underlying that things start to look a little unstable.
Well, we are not advising anybody to buy ETFs or derivatives based on gold. Every investor ought to have maybe 5 or 10% of their net worth in physical bullion and gold bars and gold coins, perhaps in their own possession in a safety deposit vault, or an ETF which actually does carry physical gold, because we believe there is a huge paper position in the gold market, and people have been piling onto gold thinking they own the gold, but in fact they don't have the gold because they've bought paper contracts, as you pointed out. But for those who are looking for extra leverage, should be looking at unhedged companies which mine gold and mine silver, and we believe both gold and silver are quite undervalued, especially silver, which is still roughly 85% below its all-time inflation-adjusted high recorded in 1980. The primary bull market, or the uptrend in gold and silver and precious metals and hard assets in general, Anna, is likely to continue for the next few years until these debt problems are all sorted out.
Yeah, when will that be? Well, we shall certainly keep an eye on that space. Thank you so much, Prue. Appreciate your comments today. Prue Saxena, of course, the money manager and CEO of Prue Saxena Wealth Management.